You know what it's
And
like,
there it
Bobby,
was.
when we're talking? You remember you go to the amusement park when you're little and the thing that goes up in the air and you wait for it to drop you?
Yeah.
That's exactly what happens when we're in the green room and we're talking because we never know when it's going to cut. And then all of a sudden it cuts and we're gone. And we're always mid-joke. But thank you.
Always
Welcome,
mid-joke.
Tradiers, Trader's Edge. I'm Jim Urio. That's Bob Iacchino. We are coming to you. It is Wednesday the 3rd. I know that many of you are watching it live, but in case you're watching it taped, Bobby, so today was interesting to me because we've been talking at length about Jerome Powell on the 20th saying, yeah, GDP is going to be higher. Yeah, PC inflation is going to be higher. Oh, and by the way, I'm going to ease 3 times in 2024, despite the fact that no one can tell why.
Yeah.
And today we got the ADP, which was stronger than expected. Now the ISM, there was an ISM numbers today that weren't better than expected and actually were worse than expected. However, he spoke a couple hours after the ADP and he sounded the same as he has before. Like he didn't argue, like he didn't think that ADP number changed anything, and he's still planning on easing. Stocks turned around, shot higher. I think they kept their bid into the end of the day. Can you see them still or no?
Yeah, I'm seeing them up, like the NASDAQ's up about a third, about 1/4%.
Okay, well, it's not down, even though we got some great
down.
numbers that should have said that he's not going to be easing. Why is he easing?
I can't honestly tell you, other than the fact that the Fed has been living scared of a slower economy, a recession. Listening to him talk today, when he was saying all his theories for why we were able to get such a strong GDP number, despite all the rate hikes that they produced over this last 2 years, he said everything but fiscal spending, which you and I both know.
I was to say, I can give him 34.6 trillion reasons.
I mean, deficit spending in the height of an economy that had a positive GDP. I don't know that we've ever seen that. And he didn't give that any credit at all. He kind of was like taking a little bit of a victory lap. And I think they want to cut rates so that victory lap can continue and they can stretch it out till they have to hike again.
Yeah, but their target is no longer 2%, right?
I don't think so. I mean, he maintained today that it was, but he kind of couched and said, we think eventually we can get there. Okay. He didn't seem to be as much of a rush as when he was doing 375 basis point rate hikes.
Oh, yeah, no doubt about it. But we'll talk about that with our guests too, because we have a lot to talk about. But we have Bret Kenwell, who's U.S. investment and options analyst at eToro. We're excited about this conversation. We have never talked to Brent before, so let's bring him in. Brent, how are you? Bret, how are you?
Good.
I'm not doing that on purpose.
That is in your head now.
That's
yes,
okay.
I know.
Man.
It's totally in my head. Before the show, I called him Brent by accident, and I won't do it again. If I do it again, you'll see me slap myself in the face. How are you, my friend?
I'm doing good. How are you guys doing?
Good. Tell us about yourself.
Could you see, before he does, could you see why I'm upset about those graphics still? Why is Jimmy higher? Why is Jimmy first? I like the font.
Say it, Bret. Say it out loud. I'm more important.
I don't know, man. You get my name wrong again, he's going to have to flip him around.
Thank you. He's going to have to get him flipped.
He's one of us.
Appreciate that.
Tell us about yourself. Where'd you come from? What do you do?
Yeah, so I've been with eToro now. Joined in the summer. You guys obviously know Kelly Cox really well, and her and I worked very closely together. And before that, I actually I worked at TheStreet.com. I was doing a lot of technical analysis with them, and just kind of doing my own work. And I knew Kelly, so it was kind of an easy partnership to add on. And and now I'm just doing analysis work with eToro.
Okay, so TheStreet.com. Somehow Jim Cramer's involved with that. Bob Lang's involved with that. Carly's involved with that. Is that correct or no? Who's involved with TheStreet.com?
Geez Louise, it's changed around so much. Jim's not with The Street anymore, I don't believe. Man, it's I don't know, it's turned over a lot.
Got it. Okay, where'd you go to school?
I went to Central Michigan. Probably not a ton of people know about it. Smaller school in Michigan, but
I'm a Midwesterner. I know about it, of course. Yeah.
Heck yeah, go Chips.
Bobby, I know you had some questions to start off with. You want to hit it? I got to hook something.
Yeah, I do. Before we get into market stuff, so you're a technical analyst, technical strategist, whatever you want to call it. Jimmy and I are both. We talk about this all the time. That we're probably 70% technical. And I may be a little bit more than that, like from my process has been to find something on a chart I like, and then find a fundamental opinion that agrees with it. And if I
Talk
can't
yourself
find
into it.
one,
That's what I do. Yeah.
yeah, I'm cautious, right? So if I see something on a chart, I said, okay, I think this is going to happen. Now, what would be the driver of it? In other words, I like to call technical analysis the steering wheel and news the gas pedal, right?
Sure.
So that's kind of the way I look at it. So when you're talking to people or when you're engaging with people on a basis of technical analysis, what's the most common mistake you see that traders tend to make when they're trying to learn it?
Well, when they're trying to learn, I think, I'd say two things really. The first thing, holy grail, right? I mean, when you get into trading for the first time, I think everyone's sort of looking for this, magical indicator, so-called holy grail. And, everyone's like, hey, man, like pump the brakes, holy grail. It doesn't exist.
Right.
And you're like, yeah, sure. You're gatekeeping that holy grail, and if you survive long enough, you realize, okay, that guy he was right. Like there is no holy grail. So it really is, trying to find what works best for you, trying to find the time frame, I think is really important. So many times when people are having technical conversations or debates, they're on completely different time frames. Like some guy trading the weekly chart is going to have a completely different view, most likely, than the person who's trading, an intraday. And so I think narrowing down kind of like what time horizons you're on, how you're operating, like that's a huge portion of it. And the second one for beginners, like you mentioned, is analysis paralysis. Like there's so many different indicators and overlays you can put on a chart. Like you can make it look like a tornado hit your charts if you wanted to. So I think those probably are the two things that really kind of slow down the newer technical traders.
All right, so let's build on that a little bit. What's the most overused, overvalued indicator in your opinion, and vice versa? What's the most underused and undervalued?
Man, I'll be honest. Like for me, I'm a simple guy, like in life and in trading. So I go with this like standard moving averages for the most part, support and resistance horizontally. I do like, trend lines and throw in a fib once in a while. Like it's nothing too crazy. I'm not a big like Elliott wave or spiral, getting into all this other stuff. But if that works for other people, it works for them. Like I can't, like if you needed me to code something, we'd be SOL. I can't code anything, but some people are great at it. And some people build entire systems based on it. It's just, and if they can, congratulations, like that is amazing. It's not me, but I think, the good thing and the bad thing about technical analysis is there's a million options that can make it impossible to find your niche. But when you find it, as long as it works and you have an edge, then like, congrats.
By the way, I love those four things you said: the moving averages that you pick out and you test, the fib. We with Bobby and I, and with our guy Mike Arnold, he goes 12.5% harmonics, which are slightly off the fibs, and then the horizontal and the trend lines, and they all, if you blend them all together and then have a feel for it, it seems to work. Now, my question to you is, okay, so I started on the trading floor 37 years ago, and I was learning trading, and I was an economics major. I thought everything had to have a reason, and I started looking at technicals. It was difficult for me to grasp. When somebody says to you, technical analysis is voodoo, it's just lines on a chart, which I don't believe that a heartbeat. How do you make people understand that it's not that and what it actually is?
It's funny because sometimes when I hear that, I know certain fundamental traders who will say that, but they make money. Like they're good traders, they're good investors, and I know some people that don't even know how to look up an income statement or a balance sheet, and they're phenomenal technical traders. Whatever, like I'm truly am of the opinion of like whatever works for you, like it works for you. If you have an edge, you can make money, then like by all means, like stick with it. For me personally, I look at fundamentals, generally speaking, as more of a trailing indicator that kind of verify the scenario we're in. If it's like a macro situation, it gives us an idea of the economy. If it's a company specific, the fundamentals let us know, like, is the business good? But the technicals is real time, like price is real time. And that's telling you like what the market thinks, how the market's reacting, and the market's forward looking. So it tends to give an idea of like what it expects moving forward. And if you can find a way to blend the two, that's, I think, kind of the best. But I love seeing like the real time market movement, like adapting to the moment when the news breaks.
So good. You said something that I'd hope you say. I'm going to underscore it before I throw the question to Bobby. Is that it's not just lines on a chart. Usually what it is, it's the market's digested all the fundamental information, and then you have the additional notions of momentum and sentiment. And you can see that from a chart. You can see in video. You can, it is personified when you see, that's fear of missing out. That there's a huge parts of that trade, and we can look at it from technically, but I love to be able to explain the psychology of it too. Robert?
Yeah, the first time I heard lines and squiggles, I was doing a CNBC spot when Jimmy and I were Futures Now contributors. And I was doing one with a friend of ours whose name I'm not going to say, but it rhymes with Scott Nations. And he came, I said what I saw on the chart. And he said, well, Jackie, that just seems like a lot of lines and squiggles to me. And I remember thinking, never mind. I'm not going to say what I was thinking. But
no, we like Scott. Scott's our guy.
We do like Scott. I really do like Scott. But I remember thinking at the time that, there's not just one way to look at things. And when I look at these lines and squiggles, and it was Scott's comments that started me thinking in this direction. I want both of you to tell me if I'm nuts. I think everything is technical analysis. When you're looking at a balance sheet, okay, you're looking at revenues now versus then. You're looking at numbers. When you're looking at customers with Netflix, for example, customer acquisition, you're looking at now versus them. It's numbers versus expectations. It's numbers. The only thing that's truly fundamental is I like this product. Everything else is a compare and contrast to what happened before and what might happen in the future, which is the same thing we do with technical analysis. Here's a pattern that has repeated. It's here again. What's the probability that it's going to repeat? Am I nuts?
You want to take that, Bret? Because I have some thoughts on that as well.
Yeah, I mean, I guess my first question, like almost like a rebound question to you guys, like when you look up something, you're like, whether it's a stock, index, commodity, whatever, where's the first place you go? I always go to the chart personally. Like,
okay.
Yeah, if someone throws out a name, I'm like, well, let's see what the market's doing with it. So that's the first place I always start. And yeah, I think you can. When you're looking at the fundamentals, you're looking for the trend, right? I mean, you want to see if it's inflation, is it trending lower, trending higher? Is revenue trending higher, lower, margins higher, lower? That's what you're looking for, right? Is the trend.
Right.
So yeah, I can't add to that because you stole it from me. Thanks, because that was exactly what I was going to say, Bret. But no, it's good. So you go, Bobby.
Yeah, Brent, where do you get the biggest return in your opinion from technical analysis? Is it risk levels, targets, general direction? Is it understanding a shift in prices? Where would you rank those sort of things?
When it comes to like answering that question, I love this. I love the old classic saying, a picture's worth 1,000 words. I think a chart's worth 1,000 words. When you've been at it for a while, you've been in technicals for years, you can look at a chart and just like that, you can see whether it is of any interest to you or not. When you look at it, you can just, I don't know, your brain, I wish I understood like the neuroscience better, but like your brain can instantly identify, like, are we making higher highs and higher lows? Are we in an uptrend? Are we in a sideways chop? Like, you can look at it and just tell right away whether you're interested or not. For me, that's, I think, narrows out 90% of trading components or trading candidates. When you're looking for something new, you just know right away, like whether you're interested or not. And then from there, you can kind of dive in a little bit deeper. When it comes to technicals, I love using it to find my risk. Sometimes that kind of can wiggle around a little bit for me personally. Like sometimes it's last week's low. Sometimes it's, if it's a bigger time frame, it could be last month's low or, key moving average support level, whatever the case may be. But I can use the technicals to define that risk level. And then I can properly position I can have a good position size based on that risk level. And then, I'm a little more flexible when it comes to the upside. I do have a couple targets I generally keep in mind. Usually a retracement or back to a prior high where I can, take some off the table, get that stop loss raised up to break even. And then I'm pretty flexible from there. I will kind of let price seek its own high.
So I'm going to tell you how, like what my process is. And then you tell me your process. Like, let's say I threw an asset to you like gold and said, can you give me a thumbnail on this? What I personally would do, and I do trade gold, is I would look at a long-term chart, like, 6 months daily bar, drawing my moving averages, drawing my trend lines. Okay, good. I've established the general overall trend. then I'll pop in a 60-minute bar and a 10-minute bar next to each other and see what the smaller time frame charts are. And then I have to make a decision about what time frame I'm trading it. Because Bob and I've talked about this before. We've been on shows talking about trading forever. When I try to trade hour to hour, I basically suck at it. When I try to trade a 2-week time frame using options to find my risk and don't get emotional, that's where I make my money. And anything beyond that, I make my money too. What's your process?
Man, I love that. I mean, mine's essentially the same. I usually will start with a daily or a weekly. I do love getting out to that weekly view just to really zoom out and get like the full trend, the full picture. But yeah, I mean, I live on the daily, and then I pick my entries and exits on a smaller time frame, usually down in the like hour or the 30-minute window, somewhere like that. But man, the thing you said about options, bingo, that's the bullseye right there, I think.
Agreed. You sleep better when you learn options and you know exactly what you can lose and what you can make. That's how you snooze at night, correct? Tell the people to learn.
Yes, seriously. I mean, I'm an options guy, so I am biased for sure. But and I know they're complicated; they're not for everyone. But you know, the reality is, dude, I've been burned too many times by having a good setup. You know, I'm sized correctly based on, you know, whatever I'm using for my, you know, my loss level. And then some stupid piece of news comes out overnight or after the market, and bam, like 10-15%, I'm just whacked. And it's way past what I was planning, you know, what my planned loss would have been. And that could wipe out like a month of profits, just like from one stupid trade happening like that. With options, man, you can size up and take a position. And it's like, say it's 1% of your portfolio or whatever on one trade. It's like, you know, I don't get, the thing could go bankrupt and I'm out my 1%. I don't really, it is what it is at that point. It's just a trade, but it just allows for that upside to be essentially uncapped, depending if you're in spreads or if you're just straight up in an option. But yeah, man, I love that portion of options. The way to define the risk is so essential, I think.
Right. And before, Bobby, I want you to ask the next question too, but my thing that I had to overcome as a trader, and this took many, many years, and again, it's not just my thing, it's everyone's thing too, is to trade position sizes that don't bring the sweat beads rolling down your face. If you have that going on, you have too big a position size on. I mean, if you're just starting out, then now the CME has the micro contracts. They're wonderful for getting your feet wet things. Bob?
Yeah, I also really like what you said about the multi-time frame analysis, because every good technical analyst that I know, including Jim just mentioned, our guy Mike Arnold, who I'm partners with in Path Trading Partners, one of the best technical analysts I've ever met, always he has a larger time frame and then he tweaks his entries on the lower time frame. It's like you hear this kind of thing over and over again. So let's talk a little bit about markets, if we could. Let's go to the S&P. So the S&P, whether you're looking at the SPY or you're looking at the ES or the SPX, you're seeing a market that, in my view, okay, so taking your picture's worth 1,000 words. I look at the chart and I see recent weakness, but I see overall strength. What do you see?
Yeah, man, that trend, I don't remember the last time I saw a trend like this strong in the S&P. It's been a while. We're up, you know, I'm just going to say through Q1. We're only a couple days into Q2. So, you know, through Q1, we're up about 10%. It was a little more, I believe, but we were up 10% in the fourth quarter too. So it's like, we're looking at back-to-back monster quarters, up 5 straight months. This trend is incredibly strong. Weakness the last couple days, which, to be fair, like I fully welcome it. I am bullish, but I like the last couple weeks. I've liked to say like I'm optimistic but realistic. Obviously, these 10% quarterly gains, you cannot expect that on a continuous basis. I mean, even just to get it once that's a victory lap for the bulls. But I think the trend overall is really strong. But I also believe we would benefit a lot, even from a bull's perspective, from some kind of pullback, a dip, consolidate, like give us a chance to get some cash off the sidelines and put it back to work. I mean, I know for me personally, I got maybe a little too cautious too soon in this rally, these last, call it 6 weeks, 4 weeks. And I've been trading with, you know, a lot smaller size, and I wish I hadn't been, but I am in anticipation of this dip that has not come. So yeah, I think overall trend's very strong, but I would love to see some kind of dip or cool off at least for a little bit.
And here's what I believe. Like I'm a bull as well. And every good up day, I put on some option positions. Like I'll sell a put to buy 2 or 3 puts below it. Particularly when Val was cheap when it was 13. Now I think it's a little higher. But I think that in about the next 3 or 4 months, because the question is going to be about when you think a correction and then a healthy correction. I think there could be an 8 to 10% swift pullback, and I think the fundamental argument that I think will accompany that will be some fissures in the banking system related to commercial real estate. And I know that's not your gig. I'm just saying that for the people out there. But do you think an 8 to 10% pullback is reasonably is good for the market longer term?
Oh yeah. Do I think it's good? Yeah. I think anytime we can get, especially in these big moves, if we can get some kind of washout, I think it's good. I mean, we have a record amount of cash sitting on the sidelines. A lot of people, whether it's investors or whether they're professionals or retails or whatever, I think, everyone's been seeing the headlines like new high, new high, new high, NASDAQ, S&P, Dow, 39,000. Everyone wants to get back in, but, we've had such a strong run and there's been no dips. Like we haven't dipped even like 2% at this rate. It was just getting kind of a little obnoxious in my opinion. It's like, open the door a little bit, man. Like, let me get some money back in the game. Let me put some money back to work. And I don't know what level that becomes. Like, I was just pulled up a chart, like 8 to 10% gets us back to the prior all-time highs in the S&P. If that happens, like, geez, they're going to be running the world is ending media. But like, if we got that, that would
Markets
be like
in turmoil.
It would be markets in turmoil. That is exactly the vibe. FinTwit would be losing their mind. But man, if we could check back to the prior all-time high, like 4,800-ish, that would be money, I think. I mean, that'd be great. I don't think it'll happen soon, but I definitely wouldn't be upset if it did.
So let's talk sectors. You sent me a couple of charts, so you let me know when you want them up here. Is there a sector you like, dislike, and if so, why and why not?
Sure. I mean, it's hard. I mean, I guess it's kind of like who's in first place, and I'm going to bet on the first place team, I guess. Like, I maybe it's a little bit of a cherry pick, but you look at energy, and now I feel like people are starting to talk about it a little bit more. Once I think now people realize it was the best performing sector in Q1, and the chart you just threw up actually was is the sector performance from 2023 for the full year, even including that whole the fourth quarter run. We saw a really strong run in the fourth quarter by just about every sector. And when you look at this, though, still for 2023, you see how dominant tech was. It's communications and tech, which, I mean, we might as well just call that tech. And everything else was okay. Only 3 sectors actually outperformed the index, and a handful of them, were actually negative on the year. So when you flip it over to the Q1, which I think is the other chart, you see how much more participation we have in the sectors, whether that's industrials, financials, materials, energy, communications. It's just a lot of participation. Like the breadth from where we were maybe 9 months ago is honestly, it really is crushing a lot of the bearish arguments out there. I think for a long time, it was only Mag 7s leading the way. It was, it's just dragging up the S&P by the inflated market caps. But then you look at the equal weighted S&P, like that's hit all-time highs. You see, our 3 major indices in the US are at all-time highs: gold, Bitcoin. If you even want to go outside the US, Germany, France, Japan, there's a lot of all-time highs in a lot of places. So this is just kind of, I think, speaks. I mean, look how much stronger the sector performance has been this year across the board, which to me just speaks to a healthy market. It helps explain why the index itself hasn't really pulled back, because we keep having all this rotation underneath the surface. There's so much strength going on in, I mean, just about every sector, really.
And this is really a 30,000-foot view of what people were complaining about last year, right? Where they were saying, yeah, the market's up, but it's not broad, right? And now you're seeing basically 10 of 11 sectors higher. I can't get more broad than this, right?
Yeah, I mean, truly. Like, I mean, go back, it's April. Go back a year ago, we were coming out of a regional banking scare where things were looking like pretty fritzy. And then we,
Wait a second, challenge. Fritzy. I've not heard this term before. Fritzy is like skittish, wacky. What does Fritzy mean?
To be honest, I just threw that term out there. I don't even know myself.
We are going to now make that a term. We were going to use that on this. I like it a lot. I knew a guy named Fritz once, and he was very confused. So it's going to be Fritzy. But anyway, go on.
Fritzy. The market was looking fritzy.
It was looking a little fritzy.
It was looking a little dicey, a little fritzy. We were down like 9 or 10% in the S&P in a hurry. The regional banking scare was going on. We were wondering, is this, the great financial crisis 2.0? Like, where are we headed with this? And then, they brushed under the rug, and a couple months later, we were, hitting highs on the 2023 highs. But we did it basically on the back of Mag 7 and Eli Lilly, if you want to call it the Mag 8, I guess. But like you guys said, there was no leadership last year at the halfway point. And, Q4 kind of changed things around a little bit because we had Fed kind of pivoted and everything came to life. And now we're 6 months from that point now, and everything is on fire. But it just speaks to the strength under the surface to see this many sectors. I believe 7 of the 11 were up 8% or more in the quarter, which, I mean, if they were up 8% for the year, that'd be like a great year. And that's, we're just one quarter in. So
Bobby, Bret, you don't mind if I have Bobby give us some, because I like the energy sector a lot too. And I think it's going higher. Can you give us a quick fundamental? I know a lot of people who are watching here, are interested in that kind of the same 30-70 ratio as us. Bob?
Yeah. So one thing interesting happened today. So with little fanfare, there was a JMMC meeting today, which for those of you that don't know what that is, that's Joint Ministerial Monitoring Committee of OPEC. Okay. And coming out of that meeting, Iraq and Kazakhstan pledged to achieve full conformity of the production cuts, as well as compensate for the overproduction that had been taking place most of the time that they had this production cut in place. Also, Russia's voluntary adjustment in the second quarter is going to be based on production instead of exports. Their production cut that they promised, they were basing it on what they exported with the sanctions, which hardly worked at all. They were actually producing a little bit more than they promised because they were exporting a little bit less based on the sanctions. They were exporting more to one place than another. So if you look at it from that perspective, this essentially means we have a larger production cut than we've had in place previous to this.
So legs or no legs?
It's got legs. My only concern with it is actually technical. And I was going to see, I don't know if I can even do this. I'm going to try and do this. I think I can. I'm going to show a chart live, and then I'll be able to show you guys what I'm concerned about. But maybe you guys could just talk about what I said while I try and figure out how to do this.
Bret, so when you look at the chart of crude, do you think it's green lights and whatever blue skies ahead? What do you think?
I mean, it just hit a new 6-month high today, so crude's been moving pretty well. Crude's an interesting one because, like, all the other commodities, it's a supply demand driven market, so it's a little bit more. I don't know. I don't necessarily want to say it's more pure, but when you look at certain stocks, yes, I mean, they can just run on momentum, right? Without the fundamentals don't have to back it up. Whereas in crude, it's driven by buyers and actual sellers who are going to deliver and take delivery.
It's driven by some cartels, and I don't use that in a bad way, who control the supply of oil as well, or attempt to control the supply. But those three things, I agree with you.
Right, but at the end of the day, that's still just basically supply and demand, right?
Oh, yeah, that's a great point. Okay, good. I can go with that for sure. Okay, Bobby, can you get your chart up? Because I have another question.
Yeah, and so to this point, I'll say what I'm concerned with.
Oh, nice.
You can see that. So we were in a horizontal channel in crude oil, and you mentioned that you liked horizontal channels. I do too. And we were in a horizontal channel from, say, I don't know, let's call it November 17th until about the breakout, which was about March 1st. And then I adjusted to an upward sloping channel. And one of the things I don't like about this, okay, is that when you break out to the upside of an upward sloping channel, it's not really bearish to go back into that channel. Okay, because it's just kind of a head fake of a breakout. And this is something that I struggle with. So for example, if we break out, or we did break out to the upside, and we go all the way back to, say, the bottom of the channel, that's almost a 10% move from where we closed today. Yet it still ends up being in an upward sloping channel, even if that lower level holds. So Bret, what do you see here? Just, picture's worth 1,000 words. By the way, that top red line is my target. We haven't reached it yet for the longs that I put on about a month ago. So
pretty close to the target. I mean, put it on a month ago. Nice trade, man.
I might want to take it off, is what you're saying. But go ahead.
Good trade, man. I mean, crude's been on fire. It's been help driving this entire sector higher. When it comes to energy, I'm honestly more of an equity person in the XLE and focusing on some of the some of the majors. But I mean, crude on the higher timeframes, it unfortunately looks strong. And I say unfortunately on behalf of anyone who drives a car on a somewhat frequent basis. But rising energy prices, that can be kind of a tough one just for consumers overall. But when it comes to like looking at the chart, it's maybe short term, it needs a rest. I would really make a case that the energy sector is the same way. There's so many names in there that it's been screaming higher. The XLE is up, I think, 7 weeks in a row.
Bobby, can you make that a 5-year chart real quick? I want to show you guys something. You keep talking, Bret. But Bret, there's something I want to.
This is XLE right now.
Yeah, I know what it is.
And yeah, and you could see basically, I'm going to take out this little crappy.
I wanted to see all those previous highs is all I wanted to show.
Yeah, there you go.
That's to me looked more bullish even than the chart you showed of that XLE. And again, you guys know my licensing is for futures. I'm not recommending anything. I'm just saying that chart to me looks like a beaut.
Yeah, I mean, in full disclosure from my end too, I also cannot recommend. So it's not a recommendation on my part, but I do play a heavy role in technicals do play a heavy role in my analysis. And to get that breakout, that was a major, I believe it's 120 ish on that chart. And or not 120, I'm thinking of Exxon in my head. But
this little dashed line I drew was right around 93 or so.
Yeah, right.
93, 92. Yeah. Major breakout for my type of style. What I would love to see at this point is a pullback into that prior resistance zone, have it hold as support, and boom, your risk is measured. And it gives you such a good point of reference.
Bobby, I have a question for you. Were you at all surprised that I had committed the long-term chart of XLE to memory and knew that those all-time highs were there? You're surprised by that, aren't you?
I was a little surprised.
Continue, Bret. Sorry.
No, it's like we continue to hear from every good analyst that the breakout, the pullback, the retest, and the hold is really almost obviously not 100% probability, but is kind of the all systems go for putting on a well-defined risk trade.
Can I have a quick question about that too? Because I would actually even add a little to that too. I'd like to see it dip back below the line and then come back out it. So oftentimes, particularly on some days with long wicks that don't have much conviction, a couple days poking the lows, trying to see who they can move into it, and then as it moves, then I think it's even more better. What do you think, Bret?
Yeah, I have a friend of mine who's got an old saying. He says, "Candles tell the story, wicks tell the damage." So maybe not necessarily applicable in this case. I don't, not expecting XLE to completely fall apart, but I would love to see some kind of pullback into there. And a lot of people are just breakout traders. That's fine too. For me, I don't have the personality, I guess, that works for breakouts. It's just to get suckered on false breakouts and false breakdowns. It just toys with me too much emotionally. I need that check back into a key area, see it hold, and at least give me that point to measure against. Then I can say, oh, here's my low. I'm going to be long against that. And I can trade based off of it. So I do hope we see some kind of pullback in energy. And I think at some point we will. It's Wednesday. We're halfway through the week. We're on our 8th week up. So at some point, this thing's got to cool off. It's just a matter of where support comes in when it does.
So I'll just show you guys why I drew this, where I drew it. Okay. You guys can see my cursor, right?
Yep.
Yeah.
So obviously we failed to break out here. We failed to break out here. Here we got kind of what you were looking for, Jimmy, where we got the breakout above it. Now this line didn't exist. Okay. Obviously, because again, if I make this a longer chart, right, you just have this one here. So it's just one test. right? Then it goes out and does not break back out above, and then it continues lower, obviously, right? But I don't want to see it go back in, but this is a contested area, and this is exactly that. It's an area. It's not a level. And for me, the reason I don't want to see it kind of go back in, we can even draw this lower line approximately here, just to make
because
this a
you think
more
it could fall to there.
reasonable look, right? Well, if it goes back in here, I mean, I've got my moving averages, but if I'm a trader who doesn't have these, and these are the moving averages I use, it's the 8 exponential and the 21 exponential. And I have these, and I could sort of use this lower area of this zone plus this high here to place a stop. But these things do have a tendency to revert back to the center of the channel. Bret, you can correct me anywhere you disagree. And once it hits there, if it breaks down from there, it's hard for me to find a stop level once it's come back into the channel. If it comes here and holds, I'm good, because I know if it goes back into, I can place what I consider to be a reasonable risk level, which is a substantial move back into the channel.
Before
and
you answer,
all
Bret,
clearly defined for me. Doesn't mean that has to be anyone else's way of doing it.
no, before you answer, Bret, because I do want to hear what you say about that. But I did say I would love to see it go back into the channel very weakly and then head back out of it. But Bret, your thoughts?
Yeah, I want to see that top area hold.
Personally,
yeah. I'm with Bobby on that. I like to see a breakout and a check back to that breakout area, whether it's a super clean, well-defined level to the penny, or if it's a zone of maybe a couple bucks wiggle room. I like to see it come in, firm up, and then give us a bounce, and then I can define my risk. If it's a really well trading name, or if it's a really strong breakout, investors should remember they don't have to. It doesn't have to be black and white. Like, they can scale in a little bit at a time. If they're going to say, my plan is to put on 10 calls, put on 2 or 3, get a feel for it, see if it comes to life. If it does, you can add on. If it doesn't, you can cut your losses and move on. But, scaling in can kind of help in those scenarios too, if you don't want to, miss the train.
I got a question for you, Bobby. Can we look at silver? The movement in silver the last 2 days, I think has been amazing. Sure. Can we take a look at that chart? Do you mind at all, Bret, or no?
Not at all. Silver's been a monster.
And then after, while he's getting the silver chart up too, I am going to ask you some questions about the Russell and its failure to make all-time highs, but now what seems to be a little bit of a technical strength. But let's look at silver first, because again,
go to the ETF.
Sure.
Just go more into Brent's wheelhouse, and if you want futures up, I can put it up afterwards.
No, I don't care. That's fine too.
How much time do you want on here?
For my lawyers who are watching this, I think this is the futures contract, so I'm making a mistake. But anyway, let's go, because I can talk about futures. That's my license.
We can do the futures work fine for me. We can look at the futures.
This is fine. This is SLV,
All
right?
Let's do the futures. Let's do the futures just to make everybody.
Okay. I don't want Jim to get any compliance issues.
Another compliance issue. This to me was a big deal.
We got Jimmy. Here's the silver futures.
So here's what I liked about it. I liked it it flirted with that high again. Call it about maybe a week ago, that big red candle where it touched it and then fell off. When it took out that high, to me, I thought it was going to run. Now I didn't buy anymore, and you know why I didn't buy anymore? Because I'm long out the ass of silver, and I have been for a long time. So I wasn't comfortable putting any more on. But it's more of an investment than a trade. What do you like about this? What are targets? Let's go.
I love the breakout. That 26 area on the futures contract was massive. I'm on I have it right up above the screen on right now. That's what I'm looking at. That 26 area was like a 2-year resistance point. To get that breakout over it, absolutely massive. Closed near the highs today. There's really not a lot to not like about that move. I mean, the one thing you could say was it's usually you see it move a little bit more. You can correct me if I'm wrong. This does sound like it's much more your wheelhouse than mine, but I feel like you usually see it moving a little more aggressively with gold, and gold had this beautiful move, this breakout over 2100, and it has just been on fire. And I was wondering, like, when is silver going to catch up, man? Like, come on.
And that's part of my analysis, was the fact that gold had been running, and silver had been trailing.
Yeah, for me,
there's historical precedent for that. Then silver plays catch up in an awful hurry.
Yeah, we're seeing that play out right now, I think. Massive move up through 26. Now we're over 27. I don't know. I don't see a reason why this can't keep going as long as the trend stays intact. As long as the metals keep trading the way metals have been trading, there's no reason for me to turn bearish on this now.
And Bobby, before I give you the next question, I want to tell you too, what I'm going to do tomorrow when in front of my terminal is I'm going to look at the gold silver ratio. And my guess is that it had been stretched. Gold was high. Now I'm going to come up with my target based on what would be slightly stretched in the other direction. You know what I mean? Because it's not just going to go to the historical mean for the gold silver ratio. And now I think the silver will outperform for a time. And that's how I'll come up with my target, which I do not have yet. Bobby?
Yeah, I'm just looking up the gold silver ratio, which I guess we could just do the math if we weren't so lazy.
I'm not going to do that. I've been working all day.
I don't.
Yeah, give them a teaser. They can come on to Twitter tomorrow, and I'll talk about the gold silver ratio and what my target is.
Yeah, it's about 84, and it's dropped off the last couple of sessions, as you might expect with silver catching.
And what's the historical average?
So, from this perspective, what's up?
What's the historical average? Do you have any idea?
What's the historical average
of the gold to silver ratio?
Yeah, so over the very long term, it's closer to about 50, but over the last, so obviously it changed with the gold fluctuations that we've seen. But the thing that I have never gotten into silver as much as I got into gold, especially with with the micros and with fractional shares that you can do through some of the brokers for the ETFs. And it's simply because for me, it like silver having this dual use, both industrial and precious.
You never know where it's
kind
at.
of like, it's kind of like me as it's kind of like me as an athlete, right? I'm really good at a lot of sports. I'm never great at one, and it did me no good at all, right? So I'm all conference in a lot of stuff, all state nothing, you know?
Yeah, that makes sense.
So I was just never able to, remember I said I look at the chart and then I try and think of a fundamental case as to why something would happen. Was never able to get my mind around the fundamental case for silver, even when I thought it was going to break out. Now, obviously, we do these catch-ups, but this is anecdotal. The last couple of times I tried to play silver on a catch-up was right around the time gold was peaking.
So
I decided just to buy some put spreads in gold rather than buy silver and see if that worked out.
It's so funny because when you look at, because I look at the exact same thing, and I try to pick the moment that it moves camps from being an industrial to being a precious and catch up. Because to me, that's interesting. And that's what excites me. It's like a girl who's cute and hot. You know, I mean, it's she can go back and forth, whatever. That's actually terrible. I'll cut that out when the show goes live. Wait, it's live already? Oh shit.
Yeah, it's live right now.
Well, then cancel me, people. I've been canceled already.
So what else are you focused on, Brett, in terms of charts that look good to you? Anything specific?
You know, I'm really just kind of waiting to see when do we get some resets, right? Like when we look at the S&P, generally speaking, it's been really strong. The dips have been really shallow, but it hasn't been as much as you can go up 10% in one quarter. It doesn't feel like it's been explosive. It's been like this slow kind of grind, right? But when you look at on a sector basis, like when you look at industrials, when you look at energy, when you look at some of these other names, it has really been explosive. You're almost like, it almost feels a little too explosive in some ways. So I'm really just kind of like waiting for some of these leading. I'm a big fan of like buying the winners and sticking with the winners until they're losers. I'm waiting for the kind of a reset to happen on the S&P and hoping that reset kind of spreads out a little more broadly into the sectors and kind of gives us just a better chance to get into some of these names that have been where you just feel like you missed the boat, missed the train.
Have you, what is there a name in the energy sector that you're intrigued by the chart more than others? And that's a question to you. And then Bobby, I'm going to ask you about if that XLE pays dividends and if we care about dividends anymore, is that going to fuel any movement on the upside? But Brett, is there names that you're interested in?
There's a lot of names that I either like or am interested in, but they've already moved so much. The one name that hasn't moved a ton, I'd say, is Chevron, which is kind of interesting because it's not like it's not a hidden name. Like it's not like a small cap you've never heard of. But CVX it's broken out very recently. Like I'm talking like the last couple days. And if that can get going, I think that looks like it has a lot of room to run. We have a pretty well-defined level on the downside that we need to watch, but that's exactly what we like as traders. We like to limit our risk, and we know exactly what we're putting on the table. And I want to see if that can play catch up, because you look at a lot of these names and they have really surged, whether that's something like an Exxon or something like a Valero. They've just both been screaming. And if we can get like a nice reset in the whole group, that'd be the best, I think. But for now, right now, like the trend is just super strong for these names.
Bobby, I got a question for you real quick. It goes back to the dividend thing. And I know you don't necessarily believe that we're going to have lower rates. Let's say that you did for a second. Would you then look at the technical analysis and then look maybe at the dividend payout and think that could be fuel for a move higher if rates were going lower?
That's to me, right?
Yeah, that's to you.
So I do think the Fed is going to cut rates. I don't think they should.
Okay.
And we could talk about this a little bit, because what we've seen over the last couple of days, where you saw the 10-year yield rise about 20 basis points in 2 days, you didn't see that on the 2-year.
Nope.
You didn't see that on the 3-month. You saw this, the probability based on the CME Fed Watch tool remain at 3 rate cuts for 2024, right? And that's part of the reason I like gold so much and have liked gold so much, is because gold isn't acting as an inflation hedge right now, because it's not an inflation hedge when an activist Fed is fighting inflation. It gets crushed when that happens. But gold is acting like we're getting rate cuts, not rate hikes. And we are reflating, in my opinion. So services inflation is still strong, by some measures 5%, by the weakest measures about 3.2. And goods inflation, while still negative, is turning up. So it's less negative than it's been, right? And if you add crude oil into that, right, you might start to see a little bit of a positive goods inflation start coming into the market, as opposed to the deflation that has been in right now. So I want to clarify, I do think we'll get lower rates. I just think it's a mistake. From that perspective, though, when you're talking about something, well, first of all, the dividend question, XLE does pay it.
That's what I thought.
It's about 73 cents, about a 3%.
So
Check my math on that. I think it's about 3% dividend yield right now. They just paid it recently, as a matter of fact. But so it does pay dividends. But when I look at 2 separate things, I don't even look at dividends at all if it's one of my trades. And I've mentioned this on both of our shows before. My average hold time is 26 days. It's actually gone to about 28 days. And it's not because I want to hold it that long. It's I either get stopped out or hits my target with an average of about 26 to 28 days. If I'm buying something and I think, okay, I'm going to hang on to this, I like dividends.
No, but that's not at the heart of my question. My question is, could it fuel the up move if you think other people are going to pile in and be attracted to the dividend? I'm not talking about you yourself taking the dividend.
Theoretically, but obviously the dividend yield drops as prices go higher. So if the Fed's going to cut rates, the dividend yield is going to go down with it, right? In theory.
Bret, what do you want to look at? Talk about.
There's a couple names in for the first time. I don't know why I'm even going to bring this up, because for the first time in like forever, we're not talking about tech, and then I'm going to go ahead and bring up tech. So it's been such
refreshing, wasn't it?
I'm just kidding.
Refreshing.
It's been so refreshing. I feel like for my whole life, while we've been talking about is tech, obviously a little bit of a stretch there, but like it's been is Mag 7, FANG before that. And it's driving all these gains. But for once, we're finally seeing like this group just chill out. They're just keeping pace. They're like, there's obviously some names are doing really well, like Meta, Netflix, Nvidia. But we have like some real stinkers in the group, right? Like Apple's been really disappointing.
Apple's been acting kind of fritzy, I think.
Super fritzy. Yes, very fritzy. Not as fritzy as Tesla, though.
Right.
Yeah, it's just I'm just kind of curious. Like eToro does like we do a quarterly survey every couple months with 10,000 retail investors, which is kind of interesting, just to get their perspective and their view and how they're positioning themselves. And quite a few people, like at least a quarter of them, I believe it was, plan on like reducing their holdings in the Mag 7. And I kind of wonder if that's extrapolated across the market, especially up to the institutional level. On some ways, it's like a place for them to hide, right? Like, they have strong cash flows, they have solid growth, yada, yada. Like, we all know the benefits of mega cap tech at this point, but do we start to see them like rotate out of these bigger names and just start to hunt for alpha in other sectors and other names? And you had mentioned small caps earlier. It's like the one major indice in the US that hasn't moved on to new highs. At a certain point, do we see the institutions, which I think we really need to be able to see the Russell move higher? We need the institutions to get back into it. Do they rotate out of the mega caps and find their way into something like a small caps? Like, that's really what I'm kind of watching, maybe the second quarter, but like definitely the second half.
I'm going to throw up one more chart before we run out of time here, because this is a perfect example, and it's Tesla. So you kind of mentioned them. It's a perfect example of, again, that picture is worth 1,000 words things. Tesla has gotten kicked in the nards.
There, that's another word we're trying to bring back, Bret. Kicked in the nards.
And we know people, not directly. I know people through my partner Mike Arnold, and Jimmy knows them through us. People who bought every dip in Tesla and just said you can't go wrong with buying dips in Tesla. How ugly is this chart? That's a loaded question.
It's not pretty. I mean, this thing is a disaster so far. The technicals are an absolute mess, but there's two things. So the first thing I would say is I've been hearing all about the fundamentals of Tesla for 12 months and how great it is, and they make the best product, and they have a robot and all this other stuff, and that's great. Like, I'm not dismissing them as a company, or I'm certainly not going to be like, hey, I'm going to challenge Elon Musk to a rocket building contest, right? So like, I'm not going to deny that it's a good company, but the people that want to make a fundamental argument for it, all they have to do is look at the chart to say, maybe I should wait till there's a little better signal to be involved in this one. I mean, it's been being destroyed for months now. Like, the market's been screaming higher for almost 6 months, since the beginning of November, and this thing has just been hammered and has never recovered from its highs. I don't even know how far off it is from the highs. It's got to be pretty significant, though. I think the high was like 410, 415. I mean, we're down here, and I will say the one silver lining to Tesla would be, which is going to sound ironic, the one silver lining is the Q1 delivery number they just gave us yesterday, because they missed so badly. Like, I did not think that they would miss. I'm not a huge, Tesla, I don't want to say I could take it or leave it, but I'm not a huge, either way, I'm not a huge bear, not a huge bull, just kind of approach it as it is any other stock. But I was pretty surprised when I saw that miss. It was, I think they delivered like 386 and change, and the estimate was close to 450. I think Bloomberg's estimate was like in the 430s. Yeah. What a massive miss. Yeah, but this goes back to the technicals now. I think, you would think if you told me that they missed by that much, I would say, okay, they're obviously going to take out the Q1 low, like the low from last month. And it didn't. So I think that didn't exactly rally on bad news, but it certainly didn't break down, I think, the way that a lot of pessimists would have thought, a lot of bears would have thought it would have broken down. I don't know that that's necessarily a bullish catalyst at this point, but that's certainly something that caught my eye. It did not take out last month's low, and the sell-off was honestly pretty muted, like 5% dip yesterday on a delivery number that was, I don't know that you could even find a positive way to spin it at this point.
Can I ask one quick question?
Almost 60%. So for right now, today's close, almost 60% lower from its all-time high.
And Bobby, this question for both of you, and it's got to be a quick answer because we're running up against time. But what price level, what trade back to or settlement changes that from such a dog chart to a better chart? Where does it got to rally to make you think it could go higher?
I mean, for me, it's got to get above this area now.
That area.
So it's funny. The thing that, and I'll make this quick, but the thing that I always like to say is, you look, it's back below its 200, and when it gets below its 200, you can see it spends time below it. It very rarely breaks and then goes right back above. So it's got to do a lot of work, and it's got to get kind of above this sort of flat area here, which looks like it's about 279. But a lot of people are buying the dip on here. I don't mind missing this particular move that I'm about to highlight, right? Let's just go right here. I don't mind missing that. because a lot of people, I'm up 61%. I bought the low. I can count on one hand the amount of times in 30 years I've bought the low.
Yeah,
I just have no interest in that. I'd rather get in a hot air balloon that's rising than one that's falling, and then I wait till it slams on the ground and flips back.
Bret, do you agree with that level-ish?
Yeah, it depends. I guess I would say it depends mostly on your time frame. Like for me personally, if you wanted to go maybe to like a monthly, I think we have like a 2-month. 205 was the February high, and 204 was the March high. So if you could get over that 205 and start to build, you can maybe make a case on we have a multi-month like upside rotation. Otherwise, you're zooming out to the quarter, and I think the quarterly high is like 250.
Yeah.
So yeah, I mean, to see things turn around, look, I mean, we're in a downtrend, so it's like I at least need to see higher lows start to form, and then you need some upside rotation. That, or you need to trade lower into a spot that maybe has a little better risk reward and a point to measure against. Right now, it's just kind of free fallish.
Yeah, no doubt about it. Okay, let's wrap it there. This has been great, Bret. Thank you so much. And
yeah,
again,
it's been blessed.
Thank you guys who watch this show. It is nothing without the support we get from all you guys, and we totally appreciate it. You know what we're all trying to do here. We believe a lot of the media doesn't give you the straight story. We believe that that it might be captured a little bit. Here it's not captured. You might get opinions, and those opinions might be crap, but at least there are honest opinions. Where can people find you, Bret?
Mostly on Twitter. That's my name. Bret Kenwell, BretKenwell. That's where I do most of my work.
Awesome. Thank you. And thank you guys for joining us on Trader's Edge.
Yeah. Thanks for having me, guys.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.